them in check as well. So while we prepare for this next session, I hope everyone's understanding well. I hope everyone's doing well. Let's start. Residential status is scope of income is what is on the screen. But guys, I have taken a slight detour and I have gone from one chapter to another chapter which is called house property. So while in the earlier session, if you're watching this as a recorded session, the earlier session one was where we discussed introduction, agriculture income, and we started off with house property. So in this session, we will complete house property and then we will dive into residential status. And if time permits, maybe the scope of income as well, or we'll see how it goes. Slow, steady, very, very sure. We're moving ahead in the second session of this DT fast track course for November 22 students. Perfect, guys. Moving ahead on house property here. So I'm just looking at house property. And while I see a nice house property, section 22 says that we are going to charge tax on this income from house property. No problem. We know in India, guys, we cannot escape income tax. 23(1) says that if you let out your house property, will you have to offer some income to the government? Yes. And for that, will the government give you some reductions? Absolutely yes. Kankanala, hi, I'm sir. I'm a new student for May 23. What should I do? Kankanala, it's a little too early for you to watch this video. What you could do is you could watch the regular batch. I have a regular batch starting very soon. I'm going to be teaching you regular, slow and steady from the scratch. You could watch that. And then you would come for the fast track course, which will happen again somewhere closer to May 23. So that should be it. Reach out for any questions. All the best. All right. Now, section 23 is LOP, where you let out your house property. This one we've already finished. Next is section 23(2), where you can have one or you can have more than one, maximum two self-occupied properties. This is clearly a benefit for us because it results in a loss, and this loss up to 2 lakh or up to 30,000 can be set off from other heads of income, including from house property. Next, guys, is 23(3), which is basically LOP plus SOP. When we have both of them together, basically means some months and some months, then this is calculated in the same manner as LOP. Now we're going to the next one, that is section 23(4), and let's see what's in store in this section. Guys, 23(4) says that what if you have more than 2 SOPs? Guys, what if you're a very rich person and it's your hobby, or it's something that you really love, you love buying house properties. So you buy one house property, you buy another house property, and you buy another house property, and you say that I'm staying in all these three. Guys, can it happen that a rich person stays in all these three? Why not? It's my life, my money, and my houses. I want to do SOP for all these three. The government says we have no problem, but from a tax perspective, we will not let this happen. So they tell you that these are your rich kids, also rich people. A lot of people make a lot of money in life and they buy multiple houses. But the government says no problem with multiple houses. We are not living in a country which does not allow you to own multiple houses. So you can buy multiple houses. But they say for tax benefit, for SOP purposes, you can take any two. So can I take A and B? Yes, as SOP, and the C. Then what will happen, guys? We will assume that it's let out. So this is a concept of deemed let out property. Can I change this next year? Can I take B and C as SOP? Yes, you can. Every year you can change it. You can switch. There is no problem in switching from one to the other. But if you have anything which is more than 2 house properties, more than 2 SOPs, then the remaining, if you don't let it out, then we will consider them as deemed let out property. So A is SOP, B is SOP, and this C1, this will be considered as deemed let out property, which is basically like LOP only with a small difference. Let's see what happens in this case. Let's see what happens in the case of C. Guys, they will say we will compare your actual rent with our expected rent, but please tell me, are you actually renting this property out? No. So will you have any actual rent? No, you will not have any actual rent. So will you only be based on expected rent? Yes, this entire calculation will be based only on expected rent. Guys, if you remember the shortcut, municipality figures the standard. You will take the municipal value or fair rent, whichever is higher, subject to the limit of standard rent. So if this is 8, this is 9, and this is 8.75, which one will you take, guys? 8 or 9, whichever is higher, so 9, but subject to 8,75. So 8,75,000 will be your ER. What is your AR? 0. So please tell me what will be my GAV. My GAV will be 8,75,000. Now, are you offering something to the government? Yes, you are. So, will you get some deductions? Yes. Municipal tax you will get? Yes. If you pay. Then what will you get? You will get NAV. Then from that, will you get 24A ad hoc deduction, which is 30%? Yes. If you're offering, you get everything back. And 24B, will you get interest deduction? Yes. Any limit on interest deduction? No, because you're offering something to the government. Anyways, the capping or the limitation is only in case of cash. It is only in case of SOP. So this is your calculation for deemed let out property. Honestly, it is not different. It is the same as LOP. Yes, it is the same as LOP, except you don't have any actual rent. So that brings us to the last thing, that is 23.5. So in this case, let's see what's happening. Guys, in 23.5, a unique situation has happened. This is not for you and me. This is for someone who holds house property as stock. So this is for a builder. This builder has built a house with 5 floors, let's say. And he is trying to sell this. So this is something that he holds as stock. Yes, he holds the house property as stock or stock in trade, whatever you understand better. He's trying to sell this. Let's say this house property was built in the year 1920. You got the completion certificate of this house property in the year 1920. He's trying to sell it, but he's unable to sell. Guys, if he sells any houses, will he be taxed under PGBP? Yes, he will be taxed under PGBP whenever he sells the house, but he's unable to sell it. Now, 1 year has gone past. Second year has also gone past. 2 years have gone past after his completion. This is the year of completion. After that 2 years, he's not been able to sell. The government is not able to charge PGBP tax also, and he has not even rented it. So the government is even not able to charge house property. Now there is a problem here, guys. The government comes and checks. So what this guy has actually done, he has given this on rent, and instead of taking money in the bank account, he is taking money in his cash. So he's trying to fool the government here, and hence the government says here, listen, we don't trust you. We will wait for 1 year. We will wait for the second year. But when first and second year is over, then after that, we will consider this as deemed let out property. So this is the concept of deemed let out property. Yes, guys, it is actually a concept of stock in trade, but which is converted into deemed let out property. So please tell me, guys, is the government going to be patient with you? Yes, 1 year, no problem. 2 years, no problem. But after 2 years, then they will consider that as deemed let out property. So 2 years starts from when? As the year you complete it, ignore that year after that 2 years. And guys, this we complete section 23. So 23 is completely done, and now let's go to section 24. Section 24 already you know a little bit, guys. 24A says that we will give you an ad hoc deduction. Anyone remembers how much is a percentage of ad hoc deduction? Guys, you get 30% of your NAV, and this 30% is, guys, irrespective whether you spend 3 rupees or you spend 30% or you spend 33%, doesn't matter. You will get this flat deduction of 30%. And there's a section called section 24B for borrowed money. On borrowed money, will you get an interest of deduction for the interest? Yes, interest deduction. Is there any limit? No limit, guys, except for SOP, where there is a limit of 2 lakh or 30,000. Now we are talking about this interest. Everyone pay attention to this interest. Guys, your CA intern has group 1 and group 2, two parts to it. Same way, this interest also has 2 parts to it. One is current year interest and one is pre-construction period interest. So there are two parts to it. Yes, there are two parts to it. One is called current year interest and one is called PCP interest. Let's understand first what is current year interest. The year your house property is ready. Let's say this is the previous year 21-22, and let's say your house property is ready this year. Maybe you acquired it this year completely ready, or maybe you constructed it and the construction gets completed today. Guys, let's say this is financial year 21-22 and the date, let's say today it's 13th August, but let's say 2021. Congratulations, this year is the year of completion, and this is also called the current year. Yes, this is called the current year, and after this all the years will be called current years. So please tell me in the chat box, guys, will next year also be the current year? After that, third year also will be the current year, fourth year also will be the current year. Yes, the year you complete, and after that every year will be called current year. And current year, how much interest can I take as deduction? Whatever is the interest paid or payable for the whole year. Yes, for the whole year. So 100% you will get. Yes, 100% you will get. What does that mean? What if this year I paid 2 lakh rupees as interest? Can I take the entire 2 lakhs? Yes. What if till 13th August I paid 90,000 and after 13th August it was 1 lakh 10? So will I take only after 13th August? No, guys, you will get the whole year. Guys, Venkat, no, you will get the whole year. This is how ICAR tries to confuse you. It sounds logical, you should get the deduction only after 13th August, but no, this is the current year. I'm not talking about the date. In current year, you have to only look at the current year. Quickly recapping, guys, please tell me, current year is the year you completed it. So 13th August is the date you completed it. So can I say previous year 21-22 is the current year? Yes. And will I get the interest deduction for the current year? Yes. Only till 13th August, after 13th August, or the full year? Which one will I get, guys? Only till 13th August? After 13th August or the full year? I will get the full year, and that's the reason it's called current year. It's not called current date. Next year, guys, what if next year again I have interest deduction of 2 lakh? Will I get interest deduction of 2 lakh? Yes. After that year, what if I have 3 lakh 30,000? Will I get interest deduction of 3 lakh 30? Yes. So current year always 100%. Can I tell you a little secret, guys? Even in spite of listening to this, you will go in the exam and you will make a mistake. I promise you, there will be at least 50% of CA Inter students who will go to the exam and who will take 1,10,000 as a deduction even after listening to this conversation. Because experience, guys, I know it for a fact that lots of you all will make that mistake, because guys, you all have to pay that little extra attention to get these nuances right. So it is a current year, you get 100% of that, yes. But guys, before this year, can your construction or could your construction have started before this year? Yes. So all the years before this year, not before the date, guys, please tell me in the chat box, do I look at the date or do I look at the year? I always look at the year, not the date. So before this year, all the years, let's take a couple of them. Previous year 2021, previous year 1920, and earlier years. If you were constructing in this period, guys, during construction also, do you land up paying any interest? Yes, because the bank has given you money. They don't care whether it's under construction or not. So please tell me yes or no. If you've taken a loan, then during construction also, will you be paying interest? Yes. And let's say you paid interest in this year of 70,000, and this year you paid interest of 1,30,000, guys. Will you get a deduction for these two amounts? Ideally, you should not, because they are not current year, but they are pre-construction period, and hence you will get this deduction 1/5 over 5 years. So 1,30,000 plus 70, how much is the total? 2 lakh. 2 lakh is my pre-construction period interest. Yes, 2 lakh is my pre-construction period interest. Divided by 5, how much is that? 40,000 rupees. And that 40,000 will be available over how many years, guys? 5 years. But starting when? Starting the year you complete, and after that 4 consecutive years. So 40,000 here, yes. Next year 40, next year 40, next year 40, next year. In the 6th year, will you get anything? No. In the 5th year, yes. 4th year, yes. 3rd year, yes. 2nd year, yes. 4th year, yes. This is called PCP interest, and this is called current year interest. Guys, one good way of getting this wrong is looking at 13th August. Guys, will you look at 13th August or will you look at the year? You will always look at the year. So please tell me, I'm giving you an example. I started my construction on the 13th of December 2017. My construction went on, and my construction got completed on 17th September 22. Please tell me my completion year or my first current year. Excellent. Guys, my previous year 22-23. This year is my first current year. Excellent, guys. This year will be my first current year. Will I get 100% of this current year? What if till 17 September, guys, 90,000, after that 1,10,000, how much will I get deduction? Excellent, I will get the entire 2 lakh. And before this, guys, this period, what is it called, guys? It is called the pre-construction period interest. What if I have paid 5 lakh rupees overall on this pre-construction period? Will I get this deduction also? Yes, over 5 years. First year is the completion year, and after that 4 more years. Guys, this is your PCP interest. So please tell me, guys, 24A is very simple. 24B, please tell me in this case, just like your group 1 and group 2, are there 2 interests? PCP interest, how much do you get? 1/5. And current year interest, how much do you get? 100%. And that is the end of section 24. Alright, let's go to the next section. Guys, the next one is a section called section 25. Please tell me one thing. Guys, do you understand give and take relationship really well? If you don't do something for someone, will they do something for you? No. So here is an example, guys. This is you and your house property, and you are in India, and you have taken a loan from a friend in the US. This friend has given you a loan, and on the loan you are paying interest. And let's say you're paying interest of 3,60,000. This interest is used for a house property in India. So do you think the Indian government has the right to tax this interest, guys? Is this connected to India? Yes. So the Indian government has the right to tax this interest. But when you pay to your friend is in the US, how will he pay tax in India? So the government tells you that, listen, don't worry. When you're paying him this 3,60,000, just deduct some TDS, let's say at the rate of 10%. You told the government, yes, I surely will deduct TDS, but you paid the money without deducting TDS. Now please tell me, do you want a deduction under 24B of interest 3,60,000? Yes, you want the deduction. But guys, did you do the work the government told you to do? No. So will they do the work that you want them to do? No. So this is section 25, which says that in case of interest payments abroad, only abroad, if TDS is not deducted, then you will not get the deduction. If you don't do your work, they will not do their work. This is the concept of section 25. So this is section 25. 24 was done. 25 is this. Very simple. Whenever you're paying interest outside India, again guys, this is interest. It has to be paid outside India and on which TDS has not been deducted, or deducted but not paid also, same thing. Next, guys, if I give my house on rent for 12 lakh rupees a year, and if there is unrealized rent of 2 lakh, can I minus that unrealized rent of 2 lakhs? Yes. uh, legally vacate our building. I just have to tell him 4 things and then I can minus 10, 2 lakhs. So I'm going to be taxable on this 10 lakhs. Did the government give me a deduction of unrealized rent? Yes. Now guys, what if this same guy comes back to me and tells me here after 4 5 years, maybe even after I sold the house, he comes to me and says, here is your 2 lakh rupees. I'm sorry, these are your arrears of rent. What are these arrears of rent? Please tell me guys and think like the government. Will this 2 lakhs be taxable? Yes, this 2 lakhs will be taxable. In the middle of the night also, if someone wakes you up and tells you that you have some income, will it be taxable guys? Answer is always yes, it will be taxable. So will this 2 lakhs be taxable? Yes, this will be taxable. Under which section? Under a section called 25A. But guys, had he paid you that year itself, would you have got a 30% ad hoc deduction? Yes. So here also you will get a 30% ad hoc deduction, and then on the balance you will be taxed under which head? Income from house property. But what if the house is sold? Still, because it's connected to that house, it will still be taxed under income from house property after giving you a 30% deduction. This is section 25A. I hope this is clear guys. So we've done a couple of sections, 23 done, 24 done, 25 done, 25A done. A is for arrears. Now moving ahead. Guys, generally in India, at what age do you get married? Generally guys, at what age do you get married? Is there any age which you think people start pressurizing you to get married? Yes. According to recent surveys, the right age or the age that most Indians get married is 26. Not really, but there is a section called section 26 which talks about co-ownership. Guys, once you get married and you buy a house after that, are you going to be buying it in both the names? Husband's name, wife's name, your name, your spouse's name? Yes. So this is called co-ownership. Let's talk a little about co-ownership. I'll tell you, my dad, when he got his house, he bought it in joint name. He also bought it, and my mom, both are 50-50 owners in the flat that they bought. So this is called co-ownership, guys. Does it change a lot? Yes, the nameplate has to be changed. The nameplate has my dad's name and my mom's name both. So in terms of nameplate, yes, it changes. But otherwise, guys, in terms of calculation, do things change when it's co-ownership? Let's check. If the first co-ownership means what? There are two or more people who own it. Does it have to always be husband and wife or spouse? No, guys. It can be two best friends also own it. But please, you should be trusting the other person to own a house property together. So it can be any two or more people who own. That's called co-ownership. Let's see what changes, guys. If that co-owned property is let out, nothing will change. Will you calculate AR? Will you compare it with ER? Whichever is greater becomes your GAV. Please tell me, are you offering something to tax to the government? Yes. Will they give you 3 deductions? Yes. And finally, will you have an income or loss from house property? Yes. Let's say the income from house property is 3 lakh rupees. Now, just like a partnership firm's profits, you will split the profits. Same way here also, you will split these profits on the co-owners. Let's say one co-owner has 50%, so he'll get 1 lakh 50, and the other co-owner will also get 1 lakh 50, both under which head of income? Under IFHP. So in case of LOP, does anything change, guys? No, in case of LOP, nothing changes, guys. Same calculation. Only thing in the end, you need to split. Only thing is in the end you need to split. We all know what is partnership firm, so this is what is same as a partnership firm. But guys, what if you are looking at SOP? What if husband and wife? What if you and your parent? What if you and your child have a co-ownership house property and you self-occupy it? Then guys, please tell me, are there two co-owners? Yes. Will each of them get a benefit of up to 2 lakhs? Yes, each of them will get a benefit of up to 2 lakhs. So in this case, both 1 and 2 will get a benefit. So SOP guys, everything will be nil, 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 nil. 24B deduction. How much will the first owner get maximum, guys? He can get maximum 2 lakhs. or maximum 30,000, you know the conditions. Same way here also you'll get maximum 2 lakhs or maximum 30,000 depending upon conditions. So is this a better deal? Of course it's a better deal, guys. You know SOP is a benefit, and here you're just going to double the benefit. Imagine, guys, if Domino's says we are going to give one free pizza per person. Guys, if you go alone, is it more beneficial, or if you go with your best friend and you take two pizzas, it's more beneficial? You go with your best friend because it's per person you get this benefit. Yes. So I'm just going to give you an example, guys, which is practically done by most of our clients. This is practically done whenever they buy a house property. They take in the husband's name and the wife's name. Both husband and wife take loans, half of the loan, let's say they both take, and both pay interest. Let's say husband is paying 2,16,000 interest and wife is paying 2,12,000 interest. Please tell me how much deduction can the husband take? In 24B he can take 2 lakh maximum. And how much can the wife take? The wife can also take 2 lakh maximum. What if this was 1,16,000? Then 1,16,000. Because it is more than 2 lakh, I've restricted it to 2 lakhs. And so both of them, they have loss from house property. So guys, is this a benefit? Yes, because these losses can be set off from the other incomes. I hope this is clear, guys. This is section 26, co-ownership. Co-ownership is nothing but the same house property is now owned by different owners. LOP is the same, just split the profits or the losses. SOP, there are two different calculations. But guys, what is the calculation? Everything is nil, 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 nothing, no complication, except that you have to minus interest. Alrighty, moving ahead, guys, to the last section, section 27. Guys, anyone here likes pets? Do you like dogs or do you like cats? Do you like pets? Yes, yes, alright. So cats, alright. So if you like, let's say you have a cat the cat is very playful, guys. But you know she poops everywhere. She poops everywhere in the house and it is a mess. So can you do one thing? Your cat, guys, can you play with the cat? And once you play with the cat for like 15-20 minutes, can you give it to your neighbor's house? And can you let her poop in your neighbor's house full day? Yes, why not? That's a good situation, guys. Best of both worlds. But guys, in income tax, if you let that happen, then will the pet come back to your house? Yes, the pet will come back to your house because it's your pet. So this is a section which is very similar to clubbing of income. Guys, this is you and this is your house property. And this is given on rent. Guys, when a house property is given on rent, is there some income on that? Yes. So the government will tax you under LOP. But you know, you already have a lot of incomes. You are in the 30% tax bracket. But here is your spouse. Here is your spouse, guys. And let's say your spouse is not having any big income. So can you transfer this house property to your spouse? Yes. And let's say the let out property, the income is 2,48,000. Now guys, you will not earn this. Who will earn this? Your spouse will earn this. And let's say she has no other income or he has no other income, then in that case, what will be the tax here, guys? The tax will be 0 because it's below the basic exemption limit. So have you fooled the government between you and your spouse? Have you tried to fool the government? Yes. So the government says, listen, whose cat is this or whose house is this? This is your cat or your house. So it will come back to you. This income from house property will come back to you. Will the asset also come back to you? No, we are not bothered about the asset. The asset can be with your spouse. She can or he can put her nameplate outside. No problem, guys. The asset remains here. So what will come back, guys? The income will come back. So please tell me here, ultimately under section 27, who will be taxed ultimately? Will your spouse be taxed? No, guys. The cat will come back. So you will be taxed on this 2,40,000. Please tell me yes or no, guys. Did you try to avoid this tax? Yes. But did it come back to you? Is this like clubbing of income? Yes, but this is only in case of house property, guys. This, if I transfer gold, if I transfer diamonds, if I transfer any other thing like an FD, debentures, this will not apply. Section 27 only applies for house property. And what if this house property, this entire scenario, guys, this clubbing will not apply in two cases. This cat will not come back in two cases. Which are the two cases, guys? What are the exceptions? First exception is when you guys are getting separated. If it's under a contract of separation or an agreement of separation, then the cat will not come back. Or if your spouse has paid adequate consideration, then the asset will not come back. If your spouse has paid you 1 crore rupees for this house, then this house is now of the spouse. So there are two exceptions. One is if you and your spouse are separating, or if your spouse has paid adequate consideration, then the clubbing will not apply. Otherwise, this clubbing will apply. This is section 27, the first part. Guys, did it work? Did your plan work? No, your plan did not work. So let's say again this house property you tried to transfer, but this time you try to transfer this house property to your minor child. You said he's a minor, he won't understand also, he won't be able to abuse this money also or this asset also. So let's transfer this to the minor child. So now guys, this house property gets transferred to the minor child. Now earlier you were earning the income. Now you will not be earning the income, the minor child will be earning the income. So please tell me, between you and your minor child, in this very nice and precious relationship of parent and child, have you abused it for tax purposes? Yes, you have abused it for tax purposes. The government doesn't like this. So guys, will the cat go back to the real owner? Here also, yes, the cat will go back. So this 2,48,000 will ultimately be taxed back in your hands. Again guys, only if this is house property. What if you are transferred some gold or diamonds or debentures or interest? Then we would see it on another chapter called clubbing. But this is only if you are transferring house property. Here also guys, this income will not be clubbed if there are two exceptions. One, of course, separation cannot be there. You cannot be separating from your minor child. So separation is not there. So instead of separation, adequate consideration is still there. What if your minor child is a YouTube star and he or she is paying you adequate consideration? Then no problem. Or what if it's a minor married daughter? Hold on guys, I know what you're thinking. How can a minor be married? But yes, it's a reality in India. Of course, it's illegal, but minors do get married. Yes, and minor married daughter, if you give them a house property, then the income will not come back. So these are two exceptions in this case. I hope you're understanding this. Yes. By the way, guys, I don't know how many of you guys are on Instagram, but I keep posting articleship. I also, whenever I upload something of CA syllabus or some video, etc., I keep posting because I don't understand any other social media. Facebook is too done and dusted. Twitter is too lazy. And LinkedIn I don't use too much. So this is, some of you are already connected, but this is my handle there. So I'm just going to leave it here. In case any of you all are there, it'll be good to connect. Just 1 second. Perfect. All right. So that's what it is, guys. These are two situations where you try to put the cat into someone else's house, but it will come back to you unless that person is paying you adequate consideration, unless you and your spouse are separating, or unless this is a minor married daughter. Guys, again repeating, the asset will not come back, only the income will come back. The government is not concerned about your assets, guys. They are more concerned about your income because they want to tax them. Next, guys. In the next few cases, they're very simple cases. In all these cases, you are trying to say that this house property is not mine. Why? Because you don't want to pay tax on it. So guys, let's say you are the owner of a house property. This is you and you are the owner of house property, and you bought this house property from a builder. or from a seller, but you've not registered the document. You've paid the money, or you've at least paid part of the money. He has given you the house, you are staying in that house, but you've not got it registered. And now, if you've not got it registered, guys, if the government wants to tax you, you are trying to say that, listen, I am not the owner, the builder is the owner because it's not registered. The government says, listen, you can't fool me, you are the deemed owner. So in this case also you were the deemed owner. In this case also you were the deemed owner. The section 27 is about deemed ownership. You are trying to say, I'm not the owner, my wife is. I'm not the owner, my minor child is. I'm not the owner, the builder is. But the government says, no, this will come back to you and you will be considered as the deemed owner. Alright. It's coming to another very simple situation, guys. But these situations are not important. This spouse and minor child situation are very important. Next. Guys, this is you. And you own the house property. Actually, you own tenancy rights. What are tenancy rights, guys? Tenancy rights are basically the rights that you get when you stay in a house property for really long, generally more than 12 years. So if, let's say, I stay in a house and it is rented and I stay in that same house for more than 12 years under the same agreement, then I get tenancy rights. Tenancy rights means the owner, the actual owner of the building or the landlord cannot ask me to vacate. Also, I have the right to sell these tenancy rights. We see them in GST also. In GST, when you sell these tenancy rights, it is supply of services, in case you remember, in case the admins are still working. So now, guys, this tenancy rights, you have it. You are the owner, but you are trying to say, no, I'm not the owner. The government says, don't fool me. We know you are the deemed owner. Last one, two, guys. This is again you. And there is an impartible estate. What do you mean by impartible estate? Impartible estate is some estate which you cannot divide. It's a big estate which you cannot divide for various purposes. You cannot divide it. So it's called an impartible estate. Is that a house property? Is that a land? Yes, but you cannot divide it. And you are saying that I don't own the entire thing. I only own a part of it. The government says, listen, don't fool us. We know you are the deemed owner of the entire impartible estate because it cannot be made into parts. So these are some examples, guys, not important honestly, and in August I would rather focus on the important bits rather than on everything. So this is section 27. Section 27 is deemed ownership. Remember the cat example, remember the pet example. Is the pet going to come back to you? Yes, the pet is going to come back to you. But please tell me, guys, what if instead of my spouse or what if instead of my minor child, I transfer this house property to my parent? This house property, I transfer it to my parent. Will section 27 kick in? No, guys, no clubbing. Happily give it to your parent. What if I give this house property to my major child? Will it kick in? No, no kicking. 27 will not apply. As 27 section applies only in certain relationships, that is spouse and minor child. Alright, with that, guys, we've almost come to the last section, that is section 22. Section 22 says a few things. Let's see what it says. It says house property does not only include houses, it also includes offices, it also includes godowns, it also includes any other house property. Basically, the name house property is wrong. It includes any house property or any property. Example, if I have an office and I give it on rent, that is also income from house property. If I have a godown and I give it on rent, that also is a house property. Unless, guys, I am doing business. If renting of godowns is my business, then, guys, which room will I be taxed in? The moment I use the word business, I will be taxed in the room, PGBP, excellent Renan, the others also. I hope you understand that the moment I do this as a business, even renting of houses, if I do it as a business, the moment you see a business in the exam, which section will you take it to? Which head? PGBP. Next. If I'm renting only a piece of land, guys, only a piece of land is not house property. Example, you have a big nice land on which you give it for marriage functions or shooting functions or some political speeches, etc. Only this land, if it's given on rent, then the income is not under this it is under IFOS. Excellent, good answers there. That is section 22. What else does 22 say? Yes. Guys, what if I'm giving a house on rent plus also furniture on rent? Guys, this is called composite rent. Composite rent is when it's not only for the house but also for some facilities or services. So house plus furniture. House I'm charging 1 lakh rent, furniture I'm charging 20,000 rent. Please tell me how will I tax it? Where will the house rent be taxed, guys? Which head, which room will I tax it? Under IFHP. And where will furniture rent be taxed, guys? Under IFOS. On which one will I get a 30% flat deduction, guys? On the house I will get a 30% flat deduction. But guys, what if I didn't know the breakup? What if house and furniture both were for 1 lakh 20 and I did not have the breakup in the agreement? Then where will this 1 lakh 20 be taxed? I don't want to give a 30% deduction, and hence this entire 1 lakh 20 will go under IFOS. Excellent, Venkat, good answer there. So if you can separate it, they will go into separate heads. If you can't separate it, then remember they don't want to give a 30% deduction, so they will take it under IFOS. Anything else? Yes, a very important concept, guys. Everyone, this was an exam question, so watch on the screen what is happening. Guys, what if this is one house and this is the ground floor and this is the first floor? The ground floor I stay, so it's SOP, and the first floor I've rented it out, so it's LOP. So please tell me, how will you calculate the rent or the income from this house property? Guys, does it happen in real life? Yes, in a lot of towns that this kind of thing happens. In Bangalore, a lot of like this happens. So ground floor is SOP, top floor is LOP. Guys, is this proportion? Yes, proportion. So in proportion, you have to apportion everything. What do I mean by that? Guys, first you'll do two calculations. One is SOP calculation separate, one is LOP calculation separate. This is not LOP plus SOP is equal to LOP. This is not that one. That is, then the same house is partly given for few months of SOP, partly for few months for LOP. No, this is part of the house, part of the house. In SOP, guys, what are the values? Nil, 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 everything nil. And 24B, assuming both to be equal, guys, this size and this size both are 50-50%. I have to apportion everything. What if the interest on this house is 1,80,000? Total interest is 1,80,000. So how much can I minus here? I can minus 90,000. So will I get loss from house property? Yes, I get loss from house property of 90,000. And what about LOP? LOP, guys, you will take the actual rent, your expected rent. If the expected rent is given for the whole house, you will do apportionment there also. You will get GAV, value minus municipal tax of the whole house. No, again 50% only apportionment. Value minus 24A, that is okay, 30% of NAV anyways. And 24B, again how much will you minus? The balance 90,000. So basically, will you apportion everything here? Yes. Now let me show you what exam did, guys. But before that, I have a question for you. In house property, how many deductions do I get, guys? In house property, how many deductions do I get totally? I get 3 deductions. Municipal tax plus 24A plus interest, 3 deductions. Whereas in PGBP, guys, how many deductions do I get? Guys, in PGBP, if you remember, any and every deduction you will get as long as it's for the purpose of business and profession. Please tell me, guys, in PGBP, in my CA firm or in my classes, can I take deduction of electricity? If I paint my walls, can I take deduction of painting? If I buy a new, salary, can I take deduction? Every deduction you can take as long as for business and profession. So here I can take every deduction. Here I can only take 3 deductions. Watch out the exam question, guys. There is a house property where the ground floor is used for business and profession. Let's say there's a shop on the ground floor. So guys, business and profession, will you have income from business and profession? Please tell me, will you have logical, guys? No tax answers here. Very logical. Will you have income from business and profession? Yes. And can I minus any and every expense in relation to this business? Yes. So Can I minus municipal tax of this entire building? If the shop is 1/3, can I minus 1/3? If the building is on interest, can I minus 1/3 interest? If they have taken a fire insurance, can I take 1/3 of the fire insurance? Yes, I can take every deduction, but only 1/3. What if the next is a SOP? Guys, then will all the values be nil, nil, nil? Yes, and the interest deduction will be how much, guys? Interest deduction again will be 1/3. Again, assuming it is 1/3. And guys, what if the top floor again you've let it out? Then guys, will again you minus municipal tax, but how much municipal tax? 1/3. Will you minus 24A? Yes. Will you minus 24B? But guys, for these two, will you minus insurance? Will you minus ground rent? No. But for business and profession, will you minus everything? Yes. So this was an exam question, guys, where they had given ground rent. Let's say 90,000. Can I minus ground rent for LOP? No. Can I minus ground rent for SOP? No. But can I deduct ground rent for business and profession? Yes, I can, 30,000. They had also given insurance, fire insurance. Can I minus it for this and this? No, but for this one, can I minus? Yes. So guys, this is the concept of section 22. This is house property. Let me check if anything is missed out. Else we will look at questions next. Okay. Guys, what if you have not taken a loan? What if the builder only has given you a loan? Is that also okay in house property? Guys, what if the builder says you pay 1 crore and 50 lakh? I will only, yes, even that is okay. You can take a loan from anyone, that's not a problem, guys. Anything else? Just let me check. Guys, what if I can't stay in Mumbai because of my job or business and I have to stay in Bangalore? Can that Bombay house be considered as SOP? Yes. And guys, what if my house property is situated abroad? Guys, do you remember there are some people whose every income is taxed? Yes. So if I am a resident, an ordinary resident, and I have a house in UK, will India tax me? Yes, India will tax me. And when they tax me, which head will they tax me on the 5 heads? They will still tax me in house property. And will they give me these deductions? Yes. All the three, yes. Municipal tax of London, can I take a deduction? Yes. Same calculation will be the same. Only thing is the house is now in the UK. All right. So with that, guys, we are coming to an end. We are at the end of this chapter. I'm looking at questions first from the question bank. So I'm uploading the question bank here. Oh, question bank is not converted yet. Okay, so I'll convert it. In the meanwhile, guys, whatever chapters we've done, let's have a look at those, all the chapters starting with house property. Here guys is the highlighted module. Every illustration we'll stop and we'll do the illustrations and the sums. Here we go. Guys, we'll do for house 1 and house 5. Please tell me municipal value, fair rent and standard rent. Which one will be the answer, guys? And actual rent is 72. So 72,000 or 80 or 90, whichever is higher. So 90. So what will be my GAV? My GAV will be 90,000. That's the first answer. Let's take the fifth one. Actual rent is 72. 80 or 85, which is higher? 80, but subject to the standard rent, 78,000. So what will be the answer here? The answer will be 78,000. This kind of questions are never asked in the exam. In fact, in the exam, they don't even give you municipal value for fair rent. We'll see exam questions also. Yes. Rajesh is a British national, a resident and ordinary resident. Will entire income be taxable in India, guys? Yes. He owns a house in London which is let out for £10,000. So what is the actual rent? The actual rent is £10,000. This is a LOP property. The municipal taxes paid are £8,000 a year. This is per month. There is no expected rent, guys. So this only will be a GAV. And 95 is the Indian currency value. So what is the GAV, guys? The GAV is 1,20,000. Can I minus municipal taxes paid, guys? Yes, 8,000 I can minus. So that is 1,12,000. That will be my NAV. From that 1,12,000, guys, can I minus 30%? Please tell me, guys, can I minus 30% from 1,12,000? Yes. So 1,12,000 into 70% is the balance 78,400. This there is no interest which I can minus. So this is 30%. So 78,400 into 95. Excellent. 74,48,000 is my income from house property. Next, guys, here Mr. Manas owns two house properties, one at Bombay wherein his family resides and other at Delhi which is unoccupied. Is the Bombay one, is that going to be SOP? Yes, I'm just writing Bombay and I'm just writing SOP. And Delhi one, we'll see what to do with that. He lives in Chandigarh for his employment purposes in a rented house. So Chandigarh, he does not have a house, he rents a house. For acquisition of house property at Bombay, he has taken a loan of 30 lakhs at 10% on the 1st of April 2020. So guys, will you get a deduction for the interest in SOP? Yes, maximum how much, guys? Maximum 2 lakh. Yes. Is he taking a loan after 1/4/1999? Yes. For acquisition, yes. So all conditions are fulfilled. He can take maximum 2 lakh. He has not repaid any amount so far. In respect to the house property at Delhi, he has taken a loan of 5 lakh at 11%. Guys, here also, guys, is this also SOP? Yes, he can take that also as SOP. Will he get interest deduction here also? Yes. Taken a loan of 5 lakh on 1/1/2020 towards repairs. But for repairs, guys, how much will the maximum deduction he get? So here it will be maximum 2 lakh, but here it will be maximum only 30,000. Compute the reduction which will be allowable for the year in respect of interest payable on such loans. It's very easy concept, very easy to do this. You will calculate 30 lakh into 10% for the whole year and you will get 3 lakh here. On 3 lakh you will get maximum deduction of 2 lakh. And on 5 lakh at 11% from 1st October 2020, but for your year is the full year. Yes, so on 5 lakh into 11% it's 55,000, but you will get maximum 30,000. All right. So here you will only get maximum 2 lakh, and here you will get 30,000. But both involved together, guys, it should not be more than 2 lakh. So 2 lakh is the final amount. Guys, remember the cap is per person. So even if you have two SOPs, the maximum you can get is 2 lakhs. Lots of examples here, guys. Anirudh has a property whose municipal value is 1,30,000. The fair rent is 1,10,000 and the standard rent is 1,20,000. So they have given you calculation for ER. The property was let out for a rent of 11,000 throughout the previous year. So guys, do you have AR and do you have ER? Yes, you have both AR and you have ER. I'm not going into the calculation right now. We'll do it on the next page. So we have AR and we have ER. Unrealized rent was 11,000. Guys, can I minus unrealized rent? Yes, I can always minus unrealized rent of 11,000. All the condition of rule 4 that legally vacate our building is rule 4. It's satisfied. The paid municipal tax are 10% of municipal valuation. So can I minus municipal tax also? Yes. 10% I have to calculate and minus because it's paid. Interest on borrowed capital was 40,000 for the year. Can I minus that also? 40,000 I can minus. Yes, I can minus. So guys should get my answer in no time. Let's do it quickly. First, actual rent 11,000 into 12 is 1,32,000. Always take 12 months, guys, unless they say otherwise. Just 1 second. So this is 1,30,000 32,000 is the actual rent minus 11,000 unrealized rent. So it's 1,21,000, which is my AR. Let's see what is my ER. My ER is 1,30,000 or 1,10,000, whichever is higher, 1,30,000, but rent control says 1,20,000, so I can only take 1,20,000. So which one will I take, guys? Whichever is higher, so I'll take 1,21,000. So my GAV is 1,21,000. Guys, I've got lots of different answers. Venkat's GAV was 1,32,000, Rinad's was 1,20,000, except the right answer. I've got all answers. So I'm slightly disappointed. I hope this is understood now. Guys, can I minus municipal tax from this? Yes, I can. How much is municipal tax? 10% of municipal value. So 10% of municipal value is, oh, no problem at all. Municipal value is 1,30,000. So 1,30,000 is 10% is 13,000. Can I minus 13,000? Yes, I can minus 13,000. So what is my NAV? 1,21,000 minus 13,000 is 1,08,000. From that, guys, can I minus 30%? Yes, you can minus 30%, 32,400. From that, can I also take interest of 40,000? Yes, both these you can minus. So 1,08,000 minus 32,400 minus 40,000 is 35,600. That is my income from house property. I hope you're understanding this, guys. This one. Perfect. Guys, we won't be able to do all the questions in fair, but we will discuss each and every question. Here we go. Very important chapter. Ganesh has a property whose municipal valuation is 2,50,000 per annum. Fair rent is 2 lakh and standard rent is 2,10,000. They have given you all the calculations for ER. The property was let out for 20,000 per month. However, the tenant vacated the property on 31st January. Basically, that means for 10 months it was rented out. So LOP is how many months? 10 months. Unrealized rent was 20,000. You can always minus unrealized rent. All the conditions are fulfilled. So this is a good question to do, guys. Let's do this. Okay. Guys, is there any vacancy loss here? Yes, there are 2 months of vacancy loss. 2 months into 20,000. So vacancy loss is 40,000. I'm just keeping all the answers, all the amounts ready. Vacancy loss is 40,000. What is unrealized rent? Unrealized rent is 20,000. Perfect. Let's start the calculation, guys. First is your AR versus your ER. What is your AR? AR is 20,000 per month into 12 months always, that is 2,40,000. So my actual rent is 2,40,000. I don't have too much space here, so I'm going to be writing in the calculation here. Actual rent is 2,40,000. Can I minus unrealized rent? Yes, you can minus 20,000. So that is 2,20,000. Can I minus vacancy loss? That depends upon ER. So let's check ER. ER is 2,50,000 or 2 lakh, whichever is higher, subject to 2,10,000. So my is 2,10,000. So is my AR greater than ER? Yes, it is. So now you ignore ER, minus vacancy loss of 40,000. So what does it become, guys? My AR is now 1,80,000. So what is my GAV? My GAV is 1,80,000. Guys, let me know if there are any doubts on this. If you go slow and steady, you will not go wrong in this. Venkat, I hope you got the answer. 1,80,000 now. From this, guys, can I minus municipal taxes? Yes. Can I minus 24A, 24B? Yes. So this question was more about vacancy loss. So I'm just showing you the answer. 1,80,000 here, guys. 1,80,000. Perfect, perfect, perfect. Guys, check this out. Compute Purna's income from house property. Purna has one house property at Indira Nagar in Bangalore. She stays with the family in the house. Guys, if you stay with the family in the house, what kind of property is that? SOP. Guys, in SOP, ignore everything. They are only trying to confuse you. Rent of similar property, does it matter? No. Municipal valuation, does it matter? No. Municipal taxes, does it matter? No, because guys, everything is zero. Only thing is you have to calculate interest and you have to minus the interest. Basically, maximum interest can be how much, guys? Can be maximum 2 lakh or 30,000 as the case may be. There is some construction, so it will be pre-construction period, etc. The construction was completed on 30th April 2017. So the year 17, 18 and onwards is going to be current year, and before that is going to be PCP interest. And together both of that will be limited to either 2 lakh or 30,000 as the case may be. Just showing you the calculation, guys. Here, interest on borrowed capital, the loan was taken after 1/4/1999, etc. So maximum is 2 lakh. Pre-construction period is 3 lakh 60 divided by 1/5, that is 72,000. Current year interest is 1 lakh 80, total is 2 lakh 52, but you can only take 2 lakh. If you want, let's do this together also so that you are absolutely clear of this, guys, concept. Here we go. Guys, please read through the question and please tell me which is the year of completion, guys. Please read through the question and please tell me the year of completion or the date of completion, any of that, guys. The construction was completed on 30th April 2017. So I'm just writing here 17-18. Guys, this is the first year of completion. But we are in which year, guys? We are in previous year 21-22. So 17-18, 18-19 second year, 19-20 third year, 20-21 fourth year, and we are in the fifth year. So guys, will we at least get 1/5? Yes, we will get 1/5 of the pre-construction period. First, let's say this year's interest. This year's interest, guys, the loan was 20 lakh and the interest rate is 9%. So 20 lakh into 9%. So this year's interest is 1 lakh 80. Will I get this full 1 lakh 80, guys? Yes, I will get this full 1 lakh 80. Plus, what is the pre-construction period? Guys, before 17-18 is pre-construction. The accumulated interest up to 31/3/2017 was 3 lakh 60. So the pre-construction period is 3 lakh 60 interest. So 3 lakh 60 divided by 5 is 72,000. 1, 2, 3, 4 and 5th year also I'll get 72,000. Ideally I should get 2 lakh 52, but I am reminding myself this is SOP. So in SOP the maximum can be only 2 lakhs. Now this is very simple. Computer house property. Rajalakshmi owns a house property at Adyar in Chennai. The municipal value of the property is 5 lakh, fair rent is 4 lakh 20, standard rent is 4 lakh 80. So this they have given the value of ER. The property was let out up to December. After that she has self-occupied. Guys, is this LOP plus SOP? And this is the same as LOP. Just 1 second, guys. Perfect. So this is the illustration number 7. This is the next one. Here we go. House 1, house 2, house 3, guys. Can you have 3 house properties which are self-occupied? Unfortunately, no, guys. So what will you do, guys? You have to help Ganesh with the perfect combination. How will you help Ganesh with the perfect combination, guys? What you will do is first take every house and find out the LOP. Find out the LOP and find out the LOP. Guys, whichever LOP is high, will you want to make it SOP? Yes. So if this one is high and this one is high number 2, then these both we will consider as SOP, and this is the smallest, this you will let it be as LOP. That's all you need to do. This kind of question in the exam is not expected because there's a lot of calculation, guys, 3 calculations. So let's calculate, guys, just informally. For calculating LOP, guys, here the interest, they've given you the interest amount. Here there is no interest, here there is interest of 55, here there is interest of 1,75,000. In all these 3 cases you'll have LOP. Yes, and take the LOP which is lowest to be the actual LOP, the other ones you take as SOP. Very simple, guys. Check this out. Prem owns a house in Madras. During the year, 2/3 of the portion of the house was SOP. So guys, 2/3 was SOP. Do you know what kind of sum is this? Yes, in SOP everything is nil 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 except interest. How much interest can I minus, guys? I can minus 2/3 interest, a portion. And 1/3 is LOP. For LOP, guys, do I have to apportion everything? Yes, I have to apportion everything, right from municipal taxes to all the amounts I have to apportion. Guys, this is arrears of rent. He recovered rent of 10,000, plus later on also he recovered some rent of 69,000. So totally 69 plus 10, 79,000 he recovered. Of that you can minus 30% and the balance will be taxable under house property. Co-owned property, section 26, that's when most people get married. 26. So this one, Miss Aparna co-owns a residential house property in Calcutta along with his sister Miss Dimple. Where the family resides. So guys, is the house SOP? So will we have to do 2 calculations because both Aparna and Dimple both will get benefit? How much will be the benefit, guys? Maximum 2 lakh or 30,000 depending on when she took the loan, etc. Loan was taken in 1/4/2020 for acquisition. So in that case, guys, will she get 2 lakhs both? Yes, maximum 2 lakhs both. This is deemed ownership concept. And finally, guys, we are come to our part, which is basically the sums at the back of your book. Yes, everyone have a look. Mr. Raman is a co-owner of a house property along with his brother holding equal share in the property. So guys, is this a concept of co-ownership? Yes. So section 26 says if it's let out property, calculate it and in the end you split. Compute the income from this house property chargeable in the hands of Mr. Raman. So they don't want the total income from house property, they only want Raman's share. And how much is Raman's share, guys? Equal share. So Raman is 50% owner. Let's check, guys. Municipal value, fair rent, standard rent. So how much will it be? 1,60,000 or 1,50,000. So your expected rent is 1,60,000. Is this within standard rent of 1,70,000? Yes. The rent received is 15,000. 15,000 into 12 is 1,80,000. That is my actual rent, 1,80,000. Now, is there any unrealized rent? Doesn't look like. Yes, while we discussed interest, I forgot to tell you guys, can I take multiple loans? Yes, you can take multiple loans, but interest on interest is not allowed because that is almost like a punishment, so that is not allowed. So which one will I take, guys? I will take the higher one. This becomes my GAV. So my GAV is 1,80,000, assuming there is no unrealized rent or vacancy loss. I hope I'm not wrong there. Guys, from GAV, can I minus municipal tax? Yes. Let's check. The municipal taxes of 5,100 have been paid by the tenant. Guys, if tenant pays it, will I get the reduction? Sorry, you will not get the reduction. So it's 1,80,000, guys. Only 3 deductions. Don't get confused with the language. You have only 3 deductions. On 1,80,000, 30% is basically 54,000. And finally, interest, guys. Is there a capping? No, this is let out, so there is no capping. Let's see the interest, guys. Interest charged by the bank is 25,000, out of which 21 has been paid. Doesn't matter how much has been paid. I can take 25. Yes. Interest on unpaid interest is 450. Sorry, I can't take this. To repay this loan, Raman and his brother have taken a fresh loan. Can I minus 5 also? Yes, you can minus 5 also. So 1,80,000 minus 54 minus 25 minus 5 is 96,000. In that, Raman's share is 50%, that is 48,000 is Raman's income from house property. Second one, guys, Mr. X owns one residential house in Mumbai. The house is having two identical units. So guys, this is apportionment. The first is SOP, the second one is LOP. There is vacancy loss. You can, guys, vacancy loss you can minus only when AR is greater than ER. They have given you ER and they have given you all the details possible. Municipal tax, can I minus? Yes. Light and water charges. Can I minus light and water charges? No. Interest on borrowed capital, can I minus? Yes. Lease money, guys, can I minus lease money? Sorry, no. Insurance charge, sorry, no. Repairs, sorry, no. What if this was business and profession, guys? Can I minus everything? Yes, you can minus everything. But in business and profession, you don't get a standard deduction of 30%. All right, let's move ahead, guys. Here we go, guys. Mr. Vikas owns a house property whose municipal value, fair rent and standard rent are given. So we have basically all the details to calculate expected rent. During the financial year, 1/3 of the portion of the house was let out. The remaining was self-occupied by him. So guys, we have SOP. For SOP, which is basically 2/3, we need nothing but the interest. And for the other remaining LOP, we need 1/3 and we need everything. So we'll have to calculate this well. Guys, here the remaining 2/3 was self-occupied. Municipal tax we can minus. Again, we have to apportion it. The construction of the house began in 2014 and was completed in 2017. Vikas took a loan of 1 lakh on 2014 for the construction of building. He paid interest at the loan of 12% and every month such interest was paid. Compute the income from house property of Mr. Vikas. Let's do this together, guys. Completely. Let's do the easier portion on the right hand side, but first we will need interest calculation. So let's start calculating the interest. They want us to calculate this for 21-22. The construction of the house began in 2014, completed in 2017. So which is the year of completion, guys? The year of completion is 17-18, 18-19, 19-20, 20-21 and 21-22. This is the 5th year, but is this the current year? Yes, this is the current year. So full year's interest I will get. Yes. Let's calculate the interest, guys. The loan of 1 lakh, 12%. So on this 12,000, is this the interest? Yes, this is 12,000. This is one part of the interest. I'm just writing interest here. Interest is 12,000 plus. What is the pre-construction period, guys? If you're not understanding this, then it's a big question mark in your exam because this is a very important chapter. So if you're losing interest, if you're not calculating it, if you're not getting this, then it is very, very dangerous because this is just the start. All right. Here, guys, your pre-construction was basically from June 2014, from basically July 2014 till this year, that is 17-18. So 14-15, 15-16 and 16-17. Guys, 3 years, but in 14-15 only for 9 months. So let's calculate very carefully, guys. For this year and this year, it's 12,000. So 24,000. This 12,000. This 12,000, guys. I'm just writing here 12k and 12k. And for this 9k. So 12 plus 12 plus 9 is 33,000 is the pre-construction period interest. So 33,000 divided by 5 is 6,600. So guys, this is the interest deduction, that is 18,600. For the entire house, yes, for the entire house. Will you have to apportion it? Yes, you'll have to apportion it. Yes, check out, guys. I'll have to click on call and I'll be back and we'll continue. Hello? Alright guys, so this one it is self-occupied portion 2/3. The only thing was the interest calculation guys, everything is manageable. So I hope you understood the interest calculation. I'll just repeat it one last time. 21, 22, sorry. The only thing in this was the interest calculation guys. 21, 22, 12,000, this you should know. So this is the current year. Will you get the whole thing? Yes. And pre-construction period you get only 1/3, 1/5. So 18,600 is your total interest for this entire house. Now between SOP and LOP, do you have to divide it? Yes, 2/3 and 1/3 you'll have to divide it. So here we go. Guys, this is have to be divided. Municipal tax is divided and interest 18,600 is also divided. Perfect. Guys, question number 4. Rohini Ravi is a citizen of US. This you can do as self-study. If you have any queries, you can let me know. This is question number 4. Next, question number 5. Yes. I think this is the last question. Yes. So let's do this one. Everyone, let's check. Two brothers, Arun and Bimal, are co-owners of a house property with equal share. So Arun 50%, Bimal 50%. Guys, this, let's check the last one. What are they asking us? Compute the income under the head income from house property and the total income of the two brothers. Basically, they're saying what is the total income from house property. All right. The property was constructed during the financial year 98-99, basically before 1/4/1999. The property consists of 8 identical units and is situated at Cochin. Guys, where it's situated does not matter. How many units does not matter. You have to consider that entire thing as the one and entire thing. During the year 21-22, each co-owner occupied 1 unit for residence. So there is SOP for Arun, there is SOP for Bimal, and there is LOP of 6 units. So this is how the 8 units are divided. The balance of the 6 units were let out at a rent of 12,000. What I would suggest guys, instead of doing LOP first, let's complete SOP. Guys, in SOP, please tell me what will the calculation. Is it nil for the entire thing? Yes, nil for the entire thing. Only interest deduction. So let's see what the interest deduction is and when was the loan taken. Interest payable on loan taken for construction of the house. Guys, this is basically 1998-99. So this is before 1/4/2009. So the maximum deduction will be 30,000 for both. I hope that is clear. All right. So this is 3 lakhs for 8 units. So 3 lakh divided by 8. So it's 37,500 per unit. So can I minus 37,500? No, unfortunately. This one is 30,000 and this one is 30,000. Guys, are we okay with this? With minimum calculation, you can finish SOP always. Please tell me guys, are we okay with this calculation? Let's check the answer guys. Here 30,000 is the loss from SOP for both the brothers Arun and Bimal. Now guys, let's start with LOP. Guys, please tell me whatever is your GAV, whatever be your GAV, please tell me how many deductions will you have? 3 deductions. So let's go for the deductions first. I know this is not the right way, but I want to train you that even no matter what difficult question, you will always get it right if you know the deductions 24A and 24B. First, municipal tax. Alright. The municipal value of the house property is 9 lakh and the municipal taxes are 20% of the municipal value which were paid during the year. So 9 lakh is the municipal value and 20% of that is the municipal tax. That is 1,80,000, but this is for 8 units guys. How much is let out? 6 units divided by 8 into 6 is 1,35,000. Was it paid? Yes. So can I minus 1,35,000? Please tell me yes or no in the chat box guys. Can I minus 1,35,000, yes, 1,35,000. Whatever will be my NAV doesn't matter right now, guys. Whatever it will be, 24A will be 30% of that. Can I calculate that later on? Yes. Or 24B interest. Guys, the total interest was 3 lakh. So 3 lakh divided by 8 into 6 is 2,25,000. Is there a limit on LOP, guys? Is there a limit on LOP? No limit. So can I minus 2,25,000? Yes, you can minus 2,25,000. So this is done. Only one deduction left now, which is 30%, guys. Life is so simple if you do it this way. Now, guys, just zooming in and just checking. 6 units were let out at a rent of 12,000 per month. So your actual rent is 12,000 into 12, that is 1,44,000, into 6, that is 8,64,000. This is my actual rent. Was there any unrealized rent? Let's check that. Repairs, can I take repairs? No. Can I take insurance? No. One of the let out units remained vacant for 4 months. So what is the vacancy loss, guys? 1 month's rent is 12,000. So vacancy loss is 48,000. Can I minus vacancy loss? That totally depends. So we'll see if you can minus vacancy loss. Next, Arun could not occupy his unit for 6 months as he was transferred to Chennai. Doesn't matter. He does not own any other house. Till it will be SOP only. The other income of Arun and Vimal are 2,90,000 and 1,80,000. This we will add to house property later on. But right now, guys, we have to see ER. The municipal value of the house is 9 lakhs. So your ER is 9 lakhs. Is there any other value given? No. So 9 lakh or 8 lakh 64, guys. Which one will you have to take? You have to take 9 lakhs. Can I minus vacancy loss? Sorry, no vacancy loss. So here we go, guys. I'm just showing you the calculation. Let out portion. Guys, the let out portion, the GAV. Oh, sorry, my bad. 9 lakh was the entire property. So 9 lakh divided by 8 into 6 is 6,75,000. Your rental, wait, sorry, it will change now. Let's do the change. 1 second. This is not 9 lakh anymore. 9 lakh is for the entire property. So divided by 8 into 6 is 6,75,000. Now please tell me, guys, can I minus vacancy loss? Yes, now I can minus vacancy loss, which is 48,000. So 8,64,000 minus 48,000 will give you 8,16,000. So now which one will I take, guys? I will take 8,16,000. So here we go. We've taken 8,16,000. Municipal tax we can minus. NAV 30% you'll get. 2,25,000 you already got. So income from let out portion is 2,51,700. Both the brothers get half. So 125,850, 125,850. So this is 125,850, 125,850. Can I set off these? Yes, they belong to the same family. So you can set it off. Then add the other incomes. So this is your total income of Arun and Vimal. Very, very good question, guys. I hope this is understood. And with that, guys, we complete the question income from house property. Guys, I don't have the question bank in PDF, so we'll not start doing that. What we will do is we will take a 2-3 minute break here. We will come back, and in the next 1 hour that we have, we will do exempt income. We are not doing residential status today. I want to do that tomorrow on a fresh note, but we will do exempt income. Very important. I think we'll almost finish the chapter in 5 minutes that we come back. If you have any questions, do let me know. Otherwise, guys, see you in 5 for the next chapter. Yes, guys, I'm back, and this chapter was humongous, guys. Not in terms of the scale and the size, but in terms of the questions. It is big, but it's really important because can expect one question of 4 to 6 marks from this. So important, yes. Go to the next chapter, guys, for the day. And this next chapter is called exempt income. Have you already started it? Yes, agriculture income was a part of exempt income. But before we start this, guys, let's take a small detour and let's do some rates of tax. Guys, we've already finished some rates of tax for individuals who are residents, residents who are 60 or more, and residents who are 80 or more. Also for non-residents, we've seen their basic tax. You remember all of them have basic exemption limit 2.5 lakhs, 3 lakhs, 5 lakhs, and this is again 2.5 lakhs. Then the slabs go from 5% to 20% to 30%. We've seen this, and we've also seen that they all get a rebate except non-residents don't get. They get a rebate under section 87A if their total income is up to 5 lakhs. As you know, the entire rates of tax is based on total income only, guys. So total income and rates of tax, imagine them hand in hand, guys. They cannot go without the other. Alright. Now we come to the second part. While A was basic tax, you don't go to a restaurant and just have soup and leave, guys. You also go to the main course and you also go to desserts. So the next one is the surcharge. Now surcharge honestly is a rich man's problem. This surcharge is paid by very few people in India because this surcharge is generally when you have very high incomes. So here, what is the surcharge is what our next discussion is going to be. Guys, the surcharge is the same irrespective of whether you're 60, 80 or non-resident, etc. Doesn't matter. The surcharge is the same. So let's see first what is the meaning of surcharge. Surcharge is not a tax. They say I'm not going to tax on your income. It's a tax on your tax. So surcharge is basically multiplied by your basic tax. So whatever basic tax you have, on that you have to multiply surcharge. So that is surcharge. And these are the 4 rates of surcharge, guys. Surcharge feels very, very bad when you actually pay it. When you aim for it, it's a great thing that I want to pay a surcharge because I want to earn a lot of money. But when you actually end up paying, you feel a little bad. So what is surcharge? If your total income, I'm going to make it on the next slide. If your total income is more than certain limits, then only there will be surcharge. So what is the total income? If your total income, that means not gross total income after deductions, if your total income is more than 50 lakhs, then the government says you are very rich, you need to pay 10% more of not your income but of your basic tax as surcharge. If your total income is more than 1 crore, then you're even richer, so you need to pay 15% surcharge. If it's more than 2 crores, then you need to pay 25% surcharge. This is very dangerous, guys. And the most dangerous, if you earn more than 5 crores, then you need to pay a surcharge of 37%. Guys, these two are very, very dangerous. They are recently introduced about 3 years back. So this one is very dangerous. What if my total income is exactly 50 lakh? You escape the surcharge, no surcharge. What if it's exactly 1 crore, then 10%? What if it's exactly 2 crore, then 15%? Only if it's more than these surcharges will apply. So more than 1 crore, 15, more than 2 crore, 25, and more than 5 crore, 37% surcharge. So guys, let's see if a person is earning 60 lakh rupees, what is the income plus surcharge, tax plus surcharge? First, on the first 2.5 lakh rupees, 0. 2.5 to 5 lakh rupees on that gap of 2.5 to 5 lakhs. On that gap at 5%, it's 12,500. From 5 lakhs to 10 lakhs on this gap of 5 lakh at 20%, it's 1 lakh. And from 10 lakhs to 60 lakhs, guys, on this gap of 50 lakhs at 30% is basically 15 lakhs. Alright, so we'll add it up. 15 lakhs plus 112,500 is basically 16 lakh 12,500. Guys, please tell me this is my basic tax. Will I get any rebate? No, you are too rich to get a rebate. Your total income is too high to get a rebate, so no rebate for you. But will you have to pay a surcharge? You're the lucky few people who earn so much money, and hence the government says you need to pay a surcharge. What is a surcharge, guys? Here it's more than 50 lakhs, so surcharge of 10%. So 1 lakh 61,250 is the surcharge you will pay. So totally, guys, 16 lakh 12,500 plus 161,250. So 17 lakhs 73,750. Excellent, Anand. So this is what you will be paying as your tax. No, of course there will be cess, but this is what you will pay with surcharge. All right. So this is the concept of surcharge. And if I want to just add point number C, C is HEC, health and education cess. What's the difference between a cess and a tax? A tax can be used for any purpose, but a cess can only be used for those purposes like health and education. This is 4% always. Yes, 4% always. So on this, guys, you will multiply or you will add this by 4%. So health and education cess will be 4%. You will add 4%. And that's how you will get the final balance number, which is 18 lakh 44,700. Imagine, guys, how bad it must be feeling if you make 60 lakh rupees a year. You almost have to give an expensive car away to the government, almost like that, almost about 18.5 lakh rupees you have to pay the government. So in reality, and this is just the start, if you earn more money, you have to pay even more surcharges. So this is how painful tax feels when you earn higher income. All right. And with that, guys, we enter into the world of exempt income. Let's try and see what are the exempt incomes which we already know, guys. There are some exempt incomes which you already know. First one, guys, section 10(1) is agriculture income. Do we know that agriculture income is exempt in India, guys? And they love agriculture farmers. Yes, it is exempt, but not dairy, not pisciculture, not horticulture, and not poultry farming. All of those will be taxable. This is only agriculture, no other cultures. Next, guys, if your HUF has already paid the tax, you have an HUF, your family HUF. Let's say you and your family members have an HUF and the HUF earns income. You have some flats given on rent. Then that HUF, guys, will they pay some tax? Yes. So when that income is distributed to the members, it is called share of income of the members. Will it be taxed again? No, it will not be taxed again. So that is exempt under section 10(2). So 10(1) done, 10(2) done. Next, you're a partner in a partnership firm, and let's say the partnership firm is paying taxes. So will the partners again on the share of profits pay taxes? No, share of profits of partners is again exempt. Guys, this is almost like you go to a restaurant and you and your parents go and you eat food. If your parents have already paid the bill, will you pay the bill again? No, why will you pay the bill again? So this is basically share of profits of partners, and share of income of members is exempt. Guys, exempt means will it be taxable? Will it enter your tax columns? No, this will be out. Next, guys, does India as a country, do we like foreign exchange? Some of you guys are from Kerala. In Kerala, guys, there are so many people who work abroad and they send money into India. Does Indian government love them? Yes, we love that they get foreign exchange into India. So there's a section called section 10(4)(2). How do you remember that? I'll give you a shortcut. There is an account called NRE account. This account only non-residents can open, and this account gives you 4.2% interest, and that interest is exempt. So interest on NRE account is exempt. Yes. How do I remember it? The shortcut is 4.2% interest. So if you get a job in Dubai and let's say you start making a lot of money in Dubai, and can you send money back into India? Yes. Can you park it in the NRE account? Yes. And will you get an exemption? Yes. Under which section? 10(4)(2). Guys, what if you come back to India and can you continue keeping the money in that account? Yes. You can't add, but you can continue keeping that money and still it will be exempt. Yes. I feel bad because on my saving account I pay tax interest. On my FD interest, I pay tax, but NRE account people, they don't end up paying tax because it is exempt under section 10(4)(2). Next, guys, we know that there are embassies across India. There is a French embassy right next to where I am right now, very close to my office. There's a French embassy. Now, in that French embassy, guys, there are French people who work, people who are from France, they come and they work there. Who pays their salaries? The French government. And guys, can we tax them in India? No, the French government says, listen, we'll only tax them. You don't tax these guys. These guys are my people. We'll only tax these guys. So because the French government is taxing them, we won't tax them. We will exempt them. So this is basically those foreign citizens who are working for foreign governments in India. Do we have to exempt? Yes. But do they have to not pay no taxes? They will have to pay tax, but the French government will charge the tax on that. So that is section 10(6)(2). How do I remember this? That there are 62 employees or French employees in that French embassy in India. So 10(1), 10(2), 10(2)(a), 10(4)(2) and 10(6)(2) are on this page. This is exempt income. Guys, what if you forget the section? Doesn't matter, as long as you remember section 10, it should be good. And guys, please focus on the concept. If you see NRE account in the exam, you should know the concept that this interest is exempt. Let's move ahead. Guys, the next one is this. If let's say there are some floods, a couple of years back, guys, in Kerala, again, there were lots of floods, and for that the government paid people money, compensation. Now this, guys, it's a big calamity. 1010 BC is big calamity. In that case, when the government pays you money, that money is exempt in case of natural calamities. Next, guys, in India, suddenly a very popular account has become the Sukanya Samriddhi account. If you have a girl child, or if you're a guardian of a girl child, then you can put money in that account. It's a very nice account. Why is it so nice? Because when you put money in that account, you get a deduction under 80C. Plus, when the money accumulates and the girl child withdraws it after she turns 18, etc., that time it is exempt under section 1011A. This is basically amounts that you withdraw from which account? From Sukanya Samriddhi account. How do I remember this? Like this is big calamity. Like this one is big calamity. This one is basically on all your occasions like birthdays, Raksha Bandhan which just went, etc. You get 1111 rupees or maybe 1100 rupees which you put in your Sukanya Samriddhi account. Next. Guys, there is an account called National Pension Scheme. What is this account in a nutshell? This is like your bank account. But guys, can you withdraw from a bank account anytime? Today, can I empty my bank account? Yes. But the National Pension Scheme is a bank account or similar to a bank account which is used for retirement purposes. Are you supposed to withdraw a lot of money from this account? No, you're not supposed to withdraw. And the government says if you wait and you withdraw after, that means let's say your National Pension Scheme account, every month you put money, your employer also puts money, the amount gets bigger and bigger. And let's say after you retire, you withdraw it, then the government feels very happy. So this 12A is after. So let's say your account balance is 10 lakh and you withdraw the entire 10 lakh rupees. The government says, listen, we will exempt you on 60% of this, that we will exempt you or give you an exemption of 6 lakhs. So basically, if you wait, you get an exemption of 60% of the total amount. So 60%, is it a good exemption? Yes, actually it should be 100%, but the government is very greedy nowadays. So hence they give you an exemption of 60%. So will you be taxed on that 4 lakhs? Yes, you will be taxed on that 4 lakhs, but the good part is you will not be taxed on 6 lakhs. Next. What if you don't have the patience and your favorite car has come out, just launched, and you want to buy the car and you withdraw your NPS in between, B is between. The government doesn't like it. If you withdraw any amount, let's say you withdraw 3 lakh in between, then they say we will not give you 60%, we will only give you 25% exemption, and that too not of the total amount of whatever you have contributed. So let's say till now out of this 3 lakh you have contributed only 1 lakh. So 1 lakh's 25% will be exempt, that is 25,000. So is this a smaller exemption? Yes, this is a smaller exemption. I'll repeat both of these one last time. There's an account called National Pension Scheme. That account is for your retirement. In that account, you should not disturb the money. If you wait and you withdraw after, then a 10-12A, you'll get a 60% whooping exemption, 60% of the total amount, yes. But if you don't have the patience and you withdraw in between, B is between, in between if you withdraw, then you will get an exemption only 25%, and that too only of your contribution. That is 10-12A and 10-12B. We'll do one more. Guys, generally banks pay 4, 5, 6% interest. So people don't enjoy that too much, but post offices pay 15% interest. Am I kidding? Yes, I am. But there's a section called 1015 which says that if you open a savings account with the post offices, yes guys, you can go to your post office, you can take up a form and make a savings account in the post office. Will you earn interest? Yes. And not just that, on that interest you will get exemption of 3,500. So what if you earn 13,500 from the post office saving account as interest? Then on that 13,500, 3,500 will be kept out as exempt, and what will be taxed is only 10,000. But what if you're joint holders? Then all the joint holders, let's say the entire 4 people are joint holders, will they get 3,500? No. If you're joint holders, then maximum 7,000 aggregate will be exempt. Repeating guys, 10-15, how do you remember that post offices gives you 15% interest, which is not true. It's only a joke for this one. Exemption is 3,500 for individual and 7,000 aggregate if you are joint holders. Alright. So guys, just recapping with the shortcuts, 4.2% NRE interest, 62 people in the French embassy in India, HUF partnership firm and agriculture income, all these are exempt. Big calamity, 11A Sukanya Samriddhi account, 12A after, 12B between, and 15 basically is 15% interest. Moving ahead. Alright. Guys, if you work really hard, can you get a scholarship from ICAI? Let's say ICAI deserves or decides to give you a scholarship, and they give you a scholarship of 40,000 rupees a month or 50,000 rupees a month. But then will it be taxed? No, they say that under a section called 1016, they say that any scholarships etc. which are notified or approved by the government will be exempt. Why is it notified or approved only exempt? Because otherwise I will say that my clients are not paying me money, my clients are giving me scholarships, and hence only approved scholarships will be exempt. Next, guys, MPs, MLAs, member of panchayats, etc. They are very important people. They are VVIPs. Do they get salary? Yes, guys, they'll get salary. We'll see ahead that they get salary which they don't want to be taxed under salary. So their salaries get taxed under IFOS. But besides the salary, guys, nothing can happen for them in salaries. The salary amount is very low. They need a lot of allowances. So the government gives them 17 allowances. So these 17 allowances, are they exempt? Yes, allowances are exempt. For MPs, MLAs, etc., the allowances are exempt. How do you remember? 17 allowances for MLAs and MPs. How do you remember this? At the age of 16, we get our first scholarship. Next, if you get any awards, etc., example, guys, the government of India gives you a gallantry award, or they give you a Padma Bhushan, etc. So in those kind of awards, if you get any money, 1017A, at 16 you get scholarship, at 17 you get an award. If you get an award, even those are exempt, but only recognized awards. Otherwise, guys, you know my clients are going to be paying me money, but they are going to be calling it awards. Next, guys, in India, a lot of gallantry awards are given. What are gallantry awards? Gallantry awards are basically bravery awards. Example, Paramveer Chakra. Now when these gallantry award winners, when they get pension or they get family pension, that is exempt. So this is not about gallantry awards. This is gallantry award winners when they get pension, that is exempt. How can we tax such brave people? So when they get pension, it is exempt. Generally, guys, pension is taxed under the head salaries, but for these guys, it is exempt. So 16 is scholarship, 17A is awards, 17 is the MP MLA's allowances, and 18 are gallantry award winners, pension, etc. Next, a very sad state of affairs in India because we have very politically disturbed neighbors. We frequently lose army men, etc. in wars. So it on an average, guys, at the age of 19, we lose people in the army at the age of 19. Such young people lose their life at the age of 19, and when they lose their life, the family starts getting some small pension called family pension. Is it taxable? Yes, generally family pension is taxable under IFOS because the person is no more, so the family gets family pension taxable under IFOS. But for these people who have lost their lives on duty, these armed forces people who have lost their lives on duty, their family pension is exempt under 1019. Remember, 19 years is when they've lost their lives, very young. Next, guys, whenever I want to go for a holiday or anyone likes to go for a holiday, we like to go for long holidays, especially 26 days to some areas which are above, basically in the mountains. This is basically Sikkim and income of people in Sikkim. Income of Sikkimese people, is it exempt? Yes. Yes, every income within Sikkim, and also interest and dividend across India from wherever they are getting. So income of Sikkimese people is exempt under 1026 AAA. Let's recap, guys. 10 16 years scholarship, 17 awards, 70 is MPs MLAs allowances, 18 is gallantry award winners, 19 is when people lose their lives in armed forces on duty, and 1026 AAA is above. Guys, it's no problem if you forget the sections here. They are rarely asked with the sections, but if you remember them, great. Otherwise, guys, you have to remember that you don't have to tax it. It should be exempt. Moving ahead to the next point. Guys, the next one is basically your pet, your income. You did not want to be taxed at a very high rate. Maybe you are in the 30% tax bracket. So this is you. You did not want to be taxed at a very high rate. So you transferred your income like your FD, your debentures, your shares, your house, your shop, etc. You transferred in the name of your minor child. Are these the assets and the income which you are transferring to your minor child? Yes. Now, the minor child will pay tax on it or will not pay tax on it and cheat the government. The government says, I understand and you can't fool me because this pet is not yours. Whoever's pet is it, it will go back to that person. So basically, you will be again taxed for the minor child's income. So every income of the minor child will be clubbed in the hands of the parent. Which parent, how will it be clubbed? We'll see in a chapter called clubbing. But right now, I have to remember, if the minor child has an income of 5 lakh rupees, will you add 5 lakh rupees to the parent's income? Yes, you will add 5 lakh rupees to the parent's income. And while you're adding this, you will give a very stupid, silly, and small exemption of just 1500 rupees per child whose income is clubbed. So if you have 3 children and all the 3 children's income is clubbed, then you will minus maximum 1500 per child. So on 5 lakh, how much will you minus? 1500. What if the clubbing is only of 1200? Then you will minus only 1200 because 1500 is the maximum. Guys, this is section 1032. Important? Yes. Just a minute, guys. All right. Perfect. So that is 1032, guys. Now, guys, moving slowly and steadily ahead to the next section, that is section 1034, which is now no more there. But this was such a good section, guys. You know what this section said? That any dividend that you earn from Indian companies will be exempt. Guys, people love this section. People invested in companies which gave them dividend and they got dividend income which was exempt. But now this section has been removed and now is dividend taxable? Yes, under IFOS. Anyways, coming to the next section, guys, 1037. Very important, slightly different also. Pay attention to section 1037. If I sell my urban agriculture land, is it taxable? Yes. If any asset is compulsorily acquired by the government, let's say they like my bungalow because they want to make a metro over it, so they want to take that bungalow away. So will they pay me money? Yes. Will it be taxable? Yes. So sale of urban agriculture land on its own will be taxable, and compulsory acquisition on its own will also be taxable. But when you combine both of them, that means if they are compulsorily acquiring an urban agriculture land, then this transaction will become exempt. Again, guys, I repeat, is urban agriculture land taxable? Sale of urban agriculture land taxable? Yes. Is compulsory acquisition of any asset taxable? Yes, because the government pays you money. It's not that they will take away my bungalow and not pay me money. They will pay me money. So hence it is also taxable. But when you combine it, that is compulsory acquisition of urban agriculture land. When you combine these two, then it becomes exempt. So this is what is 1037. It exempts compulsory acquisition of urban agriculture land, but this one is only given to individuals and HUF who prove that they have used this for agri purposes in the last 2 years. So basically, how will they prove it? If you use it for agri purposes, you have to show where have you sold the agricultural produce, etc. So you have to prove that you have basically used it for agri purposes in the last 2 years. This is section 1037. We are very close, guys, to completing the chapter. So this is 1037, this is 1032. Just recapping: scholarship award, gallantry award, armed forces losing their life, 1026 above Sikkim, 1032 minor child clubbing 1500, 1037 is basically a combination of these two. Next, moving ahead, guys. The next one is very innovative concept called reverse mortgage scheme. Under reverse mortgage scheme, you give your bank your house papers. So this is a bank, this is you, and you give the bank your house or your land or your office papers, and the bank in terms every month gives you money. This is called reverse mortgage. Why reverse? Because generally, guys, they don't pay you money, you pay the bank every month EMI, but in this case the bank pays you every month because you have given them papers. So bank gets papers and you get money every month. Now this is called reverse mortgage. How will the bank recover the money? After a few years they will ask you for the money back with interest. If you're not there, then they can sell the house which they have papers of that. But if you are alive, you can repay them the money. If your children want to repay them, you can repay them. Otherwise, they always have the papers of the apartment or the land they can sell and they can recover. This arrangement is called reverse mortgage service. Now, reverse mortgage, in this, guys, you generally do it at the age of 43 years, reverse mortgage. And in this, whatever you get, whatever money you get, because you have to repay, it's not an income, and hence this is exempt. Why is it exempt, guys? Not because of any other reason, but this is a loan. This is actually a capital receipt which you have to repay, and hence this is exempt. All right, so these are all the exemptions under the chapter exempt income. Although in the module they discuss one more section called 10AA, but that is actually not an exemption, that is a deduction, which we will do when we discuss deductions. This is not something that I'm discussing today or right now. So this is 10AA, this is deductions, which we will discuss when we discuss deductions. What is the difference between exemption and deduction? I'll let you know, guys. Exemption doesn't enter the room, it waves out from outside the window and it leaves. It doesn't enter the room. Deductions, on the other hand, they enter the computation, they enter the room, and then after the GTI, you get a deduction. So deductions basically are part of your computation, yes, whereas exemption, they wave you from outside, they listen, I'm agriculture income, goodbye, and they leave from outside itself. So this is a concept, guys, of exempt income. Quickly recapping with the shortcuts, the first thing they exempted was agriculture, shortcut. Second thing they wanted to focus was on family, shortcut. Similar to the second one is also partnership firm, share of profits of partners, exempt, shortcut. 4.2% interest in NRE account, exempt, shortcut. 62 people working in the French embassy in India, employed by the French government, the salary is taxed by the French government, so we have to exempt them, shortcut, 62 people. 1010 BC, big calamity when you get money, shortcut, BC is big calamity. 1011A is 1100 rupees in Sukanya Samriddhi account, not the contribution but the receipt is exempt. 1012A is after, 1012B is between of NPS, after 60%, between 25%. 1015 is basically 15% interest in post office, 3,500 and 7,000, this is important. 1016 scholarship, 1017A awards, 1017 MPs MLAs allowances, 18 gallantry awards given every year, their pension is exempt. Armed forces people who lose their life, their pension is exempt. 1026A Sikkimese individuals, everything is exempt. Interest and dividend even across India is exempt. 1032 is per child, the income which is clubbed is exempt up to 1500. 1037 is a combination of these which is also exempt. 1043 is reverse mortgage scheme whereby you get money which you have to repay, so hence it's not income, it is also exempt. Alright guys, so this was a chapter of exempt income. Agriculture income was also part of this, but we discussed it separately. So let's take stock of where we are. Guys, we did a chapter called Introduction to DT. We did a chapter called Agriculture income, plus we also did exempt income. We've also done a chapter called Income from House Property. While we are at it, we are also looking at rates of tax, which is also going on parallelly. This is what we did today. We still have some time, we'll see what else we can do, but I'm just setting the agenda for tomorrow as well. Guys, tomorrow we are going to be looking at residential status and scope of income. That entire chapter will happen in the first half, and after that we'll be looking at another head of income called income from other sources. So these are two things at least we will finish tomorrow. Of course, our best friend rates of tax will continue in the background. Alright, so this is what we are, where we are at. This is tomorrow's agenda already set. We have good amount of time. I've kept more time for DT as compared to GST because this is bigger and this will require that much time. Nice. In today's session, rates of tax, I'm just going to go one step ahead and also discuss rates of tax for some more people like HUF. Nice. Hindu undivided family, can they also have incomes? Yes, so they will also have total income and they will also have to pay tax, a basic tax. Their basic tax, guys, is very similar to individuals. That means up to 2.5 lakh rupees is their basic exemption limit. So no tax, yes, no tax. From 2.5 to 5 lakhs, they also have to pay at the rate of 5%, similar to individuals. From 5 lakhs to 10 lakhs, they also have to pay 20, and 10 lakhs plus, they also have to pay at 30%. So is this the same? Yes. But will they get any higher basic exemption limit? No, sorry, because they don't vote. Individually they vote, but as a group they don't vote. So hence no higher basic exemption limit for them. And will they get a rebate if their total income comes up to 5 lakh rupees? No, because again they don't vote, we don't need to please them. B. Will they also be paying surcharge? Yes guys, same 10% or 15% or 25% or 37% they will also be paying, depending upon how high is their total income, more than 50 lakh, more than 1 crore, more than 2 and more than 5 crore. And guys, everyone's best friend and the easiest thing to remember is health and education cess, which is always going to be at 4%. But remember, surcharge is always on the basic tax. So B is dependent on A and C is basically dependent on A and B. So this is of HUF. Similarly guys, for AOP and BOI also same like HUF. And similarly for artificial jurisdictional person also same like HUF. So all these four somewhere are interconnected individuals, HUF, AOP, BOI and AJP. All four of them are interconnected because they all have basic exemption limits. They all have slabs. They all have surcharges. They all have HEC. Only thing is individuals, they get higher basic exemption limit and they get rebates. Alright. Guys, with that, we have some more time left. It's about 2:08. We have about 15-20 minutes left. Let me check what we could do in that much time, or if we can just do some exam question. I'm just going to put up some exam question here which we could discuss from IFHP chapter. Just give me a minute. Here we go guys. I've again pinned the group for the Telegram. You can always join the group. Here we go. These are exam questions. This is from IFHP. Let me just put it up. Yes. All right. Guys, looking at this question, everyone pay attention. This is a question from July 21 paper from income from house property. Mr. Ramesh constructed a big house. Construction completed in the previous year, 8-9, many years back, construction was completed with 3 independent units. Unit 1 is 50% of the floor area is let out. So guys, this is let out property and that is 50%. I will do all the calculation here of let out property. Its monthly rental is 15,000 per month, so that will help us to get actual rent. A sum of 3,000 could not be collected, so that is basically unrealized rent. No other property of Mr. Ramesh is occupied by the tenant. Unit 1 remains vacant for 2 months, so there is vacancy loss also. Unit 2 is used for purpose of his business. So this is from PGBB perspective guys, he is using a place of business. Remember in PGBB there is no 3 deductions, you can take unlimited deductions. is used by Mr. Professor of Business, while Unit 3 is utilized for residence. So Unit 3 is SOP, which is the easiest. So let's do SOP first. For SOP guys, we only need interest. So interest on capital borrowed for construction of the property is 60,000. I 60,000 and this is only 25% of that. So 25% of 60,000 is basically 15,000. Can I take 15,000 deduction? Yes. Is there a limit of 2 lakh or 30,000? Yes, but we are within both the limits guys. So then 15,000 is perfectly doable. So we are taking a deduction of 15,000 here. This is done and dusted. Determine the taxable income of Mr. Ramesh. This is a loss from house property. This is over. This is loss, which is 15,000. Now let's go to any of them guys. Let's go to LOP. In LOP first we have to check out AR. Guys, AR versus ER. AR is given as 15,000 per month. So 15,000 into 12 is basically 1,80,000. 3,000 could not be collected, so that is unrealized rent, that is 3,000 rupees. So 1,77,000 is my actual rent right now. Is the property vacant? Yes, remains vacant for 2 months. 2 months into 15,000, so vacancy loss is basically 30,000. But I'm not minusing right now because I don't know whether you can minus or not. So let's check ER. Guys, other particulars of the house. The full house municipal valuation is 1,88,000. This is only 50%. So 1,88,000 into 50% is 94,000 municipal value. Fair rent is 2,48,000. 2,48,000 into 50% is 1,24,000. And standard rent is 2,28,000. 2,28,000 into 50% is 1,14,000. So which is higher guys? 1,24,000, but the standard rate is 1,14,000. So this is 1,14,000. Can I minus vacancy loss? Yes, you can. Yes, you can. So 1,77,000 minus 30,000 is basically 1,47,000. So that is my GAV. Yes, that is my GAV. 1,47,000. From that, you know guys, only 3 deductions. Let's see municipal tax. Is there any municipal tax? Municipal tax is 20,000, but you can take only 50%, so that is 10,000. That is 1,37,000. Can I minus 1,37,000 into 30%? Always guys, 41,100. And what is the interest paid on capital? 60,000. So can I minus 50% of that without any capping? Yes, 30,000. So 1,37,000 minus 41,100 minus 30,000 is 65,900. Is that profit or is that income? Yes. So I've got one income from house property, which is 65,900. I've got one loss from house property, which is 15,000. So these two are my answers till now. Let's see any other thing guys. Any third, after third deduction guys, anything else? No, you cannot have even 3.1 deduction, only 3 deductions. Now let's see PGBP guys. Income of Ramesh from his business is 1,40,000 without debiting house rent and other incidental expenditure. So 1,40,000 is what I am starting with. They have minused all expenses except rent, etc. Let's see now guys. From this 1,40,000 guys, can I minus municipal tax? Yes, but only 25%. So 20,000's 25% is how much? 5,000. I'm minusing 5,000. Can I minus repairs? Yes, but only 25%. Guys, I can take and minus anything as long as it's for the purpose of business. Can I minus interest on borrowed capital? Yes, again 25%, that is 15,000. Can I minus ground rent? Yes, 66,000 into 25%. 6,000 into 25%, that is 1,500. Can I minus insurance premium? 60,000 into 25%. Yes, 15,000. So after minusing all this, let's see what is the final number. 1,40,000 minus 5,000 minus 1,250. Oh, sorry. 1,40,000 minus 5,000 minus 1,250 minus 15,000 minus 1,500 and minus 15,000. So that is 1 lakh to 250. So PGBP is 1 lakh to 250. So if you total these three up, you will get your total income, because what have they asked us? They've asked us to find out the taxable income of Mr. Ramesh. So this is the taxable income, 1 lakh to 250 plus 65,900 minus 15,000 is basically 1 lakh 53,150. This is the taxable income of Mr. Ramesh. Will he land up paying any tax, guys? If this was his only income, no, he'll not land up paying any tax because it's much below the basic exemption limit. Perfect, guys. One more question down. These are the kind of questions that are asked in the exam also, so you should be prepared. If your methods are right, you will be right, guys. I'm opening up for any questions if you have. Otherwise, I'm going to see you guys tomorrow for a Sunday special lecture. Make sure the attention is good, make sure the lunch is slightly lighter, and I'll see you guys at 3 o'clock with a strong cup of coffee. Thank you, and see you guys tomorrow in the afternoon at 3 p.m. Thank you, guys. Good night. I'm here for any questions if you have.